Hey guys, what's up? Alec back with another stock market investing video. And today we have everyone's favorite video on the channel. It's going to be 15 stocks to watch out for this week and to have on your watch list with price alerts too. So today we have our Sunday stock talk where we talk about the favorite stocks, and I try not to repeat stocks. So these will be different stocks than the last few videos too for the most part. So as you see in the last 3 months, I'm up $5,758, nearly 48% in the last 3 months. So if you guys need help with some gains, if your profile doesn't look quite like mine, go ahead and reach out to me. I'm actually closing signups on Sunday. But when I close my close friends list and my coaching programs, I always have a wait list. So DM me on Instagram to get on the wait list so you'll be first in line when I open back up too. All right, so enough of that. Let's get right into these 15 stocks. All right, so the first one we have here is Pfizer, ticker symbol PFE. It's on the back of everyone's mind because last week it's down nearly 10%. And it was supposed to have a rally week because if you look at all the headlines and all the news surrounding Pfizer, it's all really good news. You know, China just ordered a bunch of the vaccine. A lot of the other countries have ordered a lot of the vaccine. America got approved by emergency use by the FDA. So it's all really good things, yet it's down about 9% in the week, right? So that means it can continue its downtrend. You know, I think it can actually see right around $36 and go back down to the support right here. So I'd put my price alert right around $36.50, $36.60 right on Pfizer, and maybe buy a little bit more at that point. Even if you can get in at 35, I think that this is going to be a great one to hold into March and maybe even April too. So we talked about Pfizer. Let's go ahead and talk about Moderna. It looks like it had a great day on Friday after hours. You know, it wasn't having a great day. It was down 5% right at market open. And then it recovered fairly quickly here, and then it went back down, but then after hours, it finished about flat. Now, if we look at the past week, it's down about 12%, which is a little bit alarming, and I made a full video on Pfizer and Moderna, so if you want to check out that video, it kind of goes in details of why they were kind of going down. You know, the market actually priced in some good news, because if you look at the last month and the last 3 months, they're up nearly 100% and 59% in the last month. So the market's already priced in the good news of the stocks, and now they're just correcting a little bit. But that doesn't mean that they're just going to keep going down and down and down. You know, long term, I think Moderna is a great play for a long-term hold, especially if you can get in at under $100, which might be a little bit unrealistic. So I'm going to be putting my official price point at $137, which is the lowest support here too. So about $137 if you can get in at Moderna, put your price points, and this is going to be a great long-term hold anywhere from 6 months, 8 months, 12 months. I think Moderna has a great future ahead of it, not just for the vaccine stock, but it's just a great company overall. So if you want to look at the financials of Moderna and Pfizer and a few of the other ones, go ahead and look at my last video that has the thumbnail. It says Pfizer, stimulus update, all that stuff. We'll go over all the financials of these two stocks. So if we pull up NIO, let's talk about NIO next. I know it's one of you guys' favorite stocks, so we'll always be talking about NIO. So you'll actually see they're up 17% in the past week, which is a great gain and a great climb for 1 week. Now, you guys know I'd rather just buy Tesla stock, but NIO, if you really want to get into them, I would say buy right around $40 and then just hold it for a swing trade. I don't know about this company long term. You know, they could keep raising up past new all-time highs to $55, $60 a share. But my opinion, NIO does offer a lot of risk because they went up 146% in the last 3 months. So I wouldn't say put too much of your money into NIO if you are going to be buying at $40. Maybe just buy $100 or $50. And then if it gets lower, keep averaging your cost down because this is a great one for 2020. This one can go to $50, $60, $70, even $100. NIO is possible going up another 100%. Definitely don't count them out, but don't put all your eggs in one basket, especially with a stock like this. And like I was saying in my last video, in my opinion, I would just rather buy Tesla and hold it for a long term. Now it's up 37% in the month. Preferably, I would like to be buying Tesla right around 550 or even 500. But if you can buy at 550, I would start loading up a little bit in there. And then if it gets low as 500, buy even more. If it gets down to 450, buy even more than that. For example, you can start at 550 with like $100, and if it gets down to $500 a share, then you can put as much as like $300. And then if it gets as low as $450 a share, you can put another $200 to $400 in. But if it gets low as $400 a share, I would probably be putting around $500 more dollars, which would put me around $1,200 if it does. So I would like to have around $1,200 to $1,500 total in Tesla if it does get as low as $400, which I think is definitely possible over the next course of a few months. So official price point is going to be $550, but I would like to buy most around $500 or $450 or even lower than that, obviously, as well. And Tesla is one of those super long-term stocks, so you don't want to just be like swing trading Tesla or buying in hopes it's going to be going up in a few months. Tesla is one of those companies that you want to be owning for 2, 3, 4, even 5 years. Typically, your mindset with Tesla, it wants to be revolved around like 5-year mindset. So if you are going to be buying Tesla, especially if you're going to be putting a lot of money into Tesla, make sure you go in with a 5-year mindset, because that's where I see the most potential in Tesla. All right, the next one we have to talk about is Alibaba, ticker symbol BABA. It's getting hit hard because of the Chinese delisting right now, so it could be a great time, a great opportunity to buy in. You'll actually see their support is down to like 250, right around 255. I've actually been buying this stock already in small amounts, but if it gets down to like 255, 256, 257, I'll be buying all around there. Even if you pull up a 3-month chart from their all-time high, they're down 15, 18% too. So they actually have had a little bit of a fall off a cliff. So it is a good time to look into Alibaba Express, but make sure with all the talks of stock market crash going around, you are having some money on the sidelines. Don't fully tap yourself out. Don't go and splurge on all these stocks, because we can be seeing a lot better prices in a couple weeks or even a couple months from now too, keep in mind. So the next one we have to talk about is Intel, and it's down about 6.5% on Friday alone, just in one day, which is a huge downward movement for a big company like Intel to actually be moving down. And you'll actually see some of their news revolving that Apple is taking their chip out and they're using less of their chips, which obviously Apple was a huge one. And you'll actually see Intel stocks sinks on report Microsoft may build own chips as well. So Apple, Microsoft are all building their own chips, where Intel was a big player in that space. I think Intel will be just fine overall. This is the lowest the stock has been in the last 3 to 4 years, so you're definitely going to want to be taking advantage of it. You don't want to be buying stocks at an all-time high or a 52-week high. And if you scroll down here and you look at what a 52-week low is, right there, 52-week low, $43. So obviously you don't want to be buying right around the 52-week high, which a lot of you guys are doing. You'll see 52-week high is about $70. It's $69. And a lot of you guys buy right around 52-week highs. So typically you want to buy around a 52-week low if you are a swing trader. So if you look at the pattern here on Intel, it looks like it's heading down a little bit more, and it looks like it can easily go back down to $45. So right around $45 to $46, I'm going to be buying a lot more Intel, and I'm going to be swing trading it all the way up to 60, 55, 60, right around that mark too. I think 55 is definitely very realistic if you're going to be holding Intel for the next few months too. So Square is one that I actually want to be getting into over the next few months. We have them up here about 8.4% in the past week, 23.9% in the past month, 68% in the last 3 months. So if you just put all your money into Square 3 months ago, you'd be up 68%, which is unbelievable. And in the last 1 year, they're up 266%, which is a huge, huge gainer and a huge, huge company. Obviously, they've taken advantage of the lockdown and everyone shutting. because they are a credit card processing company for smaller to medium-sized businesses, where a lot of the smaller to medium-sized businesses are doing stuff online now, and they need a way to process the credit card. So Square is right there. I think Square can have some huge growth in the next 2 to 3 to 5 years. So they're definitely one that you're going to want to be looking out for the long term. And I'm going to want to be buying Square. Anything right around $200, $205. I would love to pick up some Square, and I'll probably be putting right around $200, $300, $400 into Square, depending on how low it gets. But have a long-term mindset when you go into Square. Even though it's up 266% in the last 1 year, I think it still can go up at least 30, 50% per year in the next 3 to 5 years. All right, the next one I have on the list is going to be Wix.com. You guys all know Wix. You should know Wix. That's how people are building the websites. So just like Square, I have pretty much the same exact mindset of Wix as I do with Square. You know, Square is a lot of people, the smaller to medium-sized businesses, they need credit card processors. But for Wix, the smaller to medium-sized businesses, they need websites. And they are one of the leaders in building your own websites and making it easy to build a website too. So with Wix, you guys probably have seen commercials even with Wix on saying, oh, it's so easy. I just popped it in, built a website. In 2 hours, I had my website complete and finished. And if you know any small to medium-sized business owners, there's a good chance they build their websites through Wix, right? So with that being said, it is one of the leaders in self-build websites and making it easy to build your own website. And if you pull up their 3-month chart, it looks like they've been trading a support around $240 to $250 a share. So I think it's super realistic. If you go back this month, in December, they were at $248. So it's definitely not unrealistic to get in right around $250. I'll love to be picking up some Wix right around $250 a share. And I'll probably be putting more money into Wix than I would be putting into Square. Because I think overall in the long term, they have some great opportunity. And if you look at their 1-year chart, they're only up 124%, whereas Square is up like 220-something%. So I think Wix has more growth in their future ahead of them, where Square already had a lot of growth and it still will have a lot of growth. I think Wix will be more exponential over the next 1 to 2 years. So if you look at their market cap, they have a $15 billion market cap. And if you guys want to, by the way, comment below on some you want me to actually dive into. And I'll go over like the financials of some of them. I'll go over the PE ratios, the market cap. And if you want me to compare like Wix versus Square, for example, to see which one's better, like financially, their income statement, their balance sheet, I'll run through all that stuff for you guys too. I love doing that for videos because I am a technical trader. And I don't like just trading blind off of what I see or heard. I actually like to dive into the financials and see for myself if they are a good company, what their revenue's like, their net income, their cash equivalents, what their long-term debt is like, short-term debt, and all that stuff too. So comment below on some companies that you want me to compare against each other, and I'll make some of those videos this week for you guys too. All right, so next up on the list is going to be PayPal, ticker symbol PYPL. And in the last week, they're up 10%. In the last month, they're up 24%. Last 3 months, 36%. And then in the last year, they're up 117%, guys. Right, so it looks like they were trading at the resistance of 200 and the support of like 175 for a little bit for most of the back end of 2020. And then all of a sudden, they broke out on December of their resistance, and they broke higher highs, and they went to 237. So this one is definitely very realistic to get in under $200 a share. It might take a couple months for the price alert to go off, but I'm putting my price alert right around 195 because I'm not in a rush or anything to get in any of these stocks. But I'm not in a rush to get into PayPal, and you guys shouldn't be in a rush either to get in any specific stocks. So it will take probably a few months for the price alert to go off, but I guarantee it, the price alert will go off. If you put most of these price alerts, they will go off. That's why we talk about a lot of stocks, is because it might take a little time for the price alerts to go off, but they will go off. You know, it's not like stocks just go up and up and up forever. They actually go up and then down, up and down, up and down, like a roller coaster. So if you look at what it's been doing here, up and down, up and down, up and down. So it's not going to just continue up. It will go back to its support of $200 to 195. So I put a price alert right around 195 on them. If you want me to compare this stock to, comment below. I'll love to compare it to like eBay, PayPal, Visa, MasterCard, even Square. I can put it against Square and see how it stacks up too. All right, and then we have an honorable mention on the list. It's going to be Litecoin. It's obviously not a stock, but it's been on fire lately, so that's why we have been talking about it. Now, it's down about 6% in the day, which is a big percentage, and it's up 38% in the last week, right? And the same in the last month as well. Now, if you scroll down, what you'll see here is I'm up 93% on Litecoin, and we're down $100 and something today, and I have about $1,600 in it. And if you look, I've been selling it off. So right here, I sold $200 at $93 a coin. I sold $200 more at $109 a coin. And then I sold $200 more at $121 a coin. So the good thing about Litecoin is it's very easy to swing trade. So it typically goes up and then down, then up and down. So I've been actually swing trading Litecoin for a long time and been making a lot of money off them. So what you'll see, total return 93%. I actually have much more than that, because what I'll do is I'll sell $200 to $400 at like 120 a coin, and then once it goes back down to like $90 or $80 a coin, I'll buy that $400 back. Now, there's only a few companies I like to trade like this because it is a little bit more risky, and it's typically companies that I'm in for the long term anyway. So I'm going to be holding those shares. Like Litecoin, I'm going to be holding probably for at least 2 to 3 years anyway. So I don't really mind selling the coins at 120. So overall, I would say that this one's a great buy, right around $90 a coin, or even $80 a coin if you can get in there. But if you look at the last resistance, which it broke out from, it was at $89 a coin, $89 a coin, and the support was right around 70 to 75 to 69. So anywhere in that range, I would love to be buying more of the coin app, and I'll probably even be buying right around $90 a coin, but my sights are set $80 or $75. Now, if Bitcoin holds and it does not go down and it does not waver and it actually stays above 20,000, 22,000, 21,000, I think that Litecoin has a really good chance of just keep going up. So it might not even get as low as $90 a coin. It really just depends on what Bitcoin's doing, because Litecoin typically follows Bitcoin pretty quickly. And like, I don't know if you guys saw the last video, but it was actually a full crypto update, and it was basically saying how Bitcoin is at an all-time high, so Litecoin can follow and go to its all-time high, which is right around $300 in the next few months. So the next one we have to talk about is going to be the Tattooed Chef, and that's TTCF, up about 10% in the day, up about 18% in the week. This is one that we have been talking about ever since it was like $13 or $14 a share, and we were definitely getting in at that time. We already sold most of our profits, but I would like to buy back into this company because I think it's actually not just a swing trade. I think this is great for a long-term hold. You guys know how I feel about Beyond Meat. I love Beyond Meat, and this is like a younger brother of Beyond Meat. And what you'll actually see too is I sold most of my shares, right around $17 a share we have them at. But the market cap is only $568 million. So this is still a very, very young company, and it's a great one to be getting in towards the bottom. So right now, I think that Tattooed Chef could go up to $50 a share, $60 a share, $80 a share, but that's long-term vision. You know, that might take 5 years, for example. So if you want to stuff this one away in your long-term account, I would like to buy anything under $20 for long-term. And if you want to swing trade it, I would prefer to buy right around $17 a share or $16 a share, which I don't know if it's possible to get that low again. So if I would probably go into this one, the Tattooed Chef, with more of a long-term mindset and not too much of a swing trade, because this is one that you're going to definitely want to own. It can be as big as a Beyond Meat. Obviously, Beyond Meat's like the #1 player in that space, but it can be up there. A top 10 plant-based food company. And we know plant-based food is the future, and it's going to completely change in the next 5 years. So this one you might want to check out and get in a little bit early too. So the next one we have to talk about here is going to be Shift Technologies, ticker symbol SFT. And what you'll see is they're up about 29% in the last 1 month, which is a huge gain, just from $6 to $8. So the smaller the shares are, the more significant gains they have when the price goes up $1 or $2. Always keep that in mind. It's only down $3.6, but that's 29% of the share price. So with that being said, I would want to buy Shift right around $8 a share. This is kind of like the Tattooed Chef, like how they're a younger company. They're still in their earlier days. If you look at their market cap, it's only about a $709 market cap. So remember, go in this one with like a long-term mindset, 2 to 3 to 5 years, kind of like how Tattooed Chef, we were talking with a long-term mindset. You probably don't want to be swing trading this one. You just want to be holding this one for a long time. Now, what this business model is kind of like Carvana, however you say it. And if you pull up Carvana, just pull it up here, Carvana. What you'll actually see is their market cap is an $18 billion market cap. And also look how fast they shot up. Just a year ago, they were a quarter of that or a third of that. And 2017, they were the same price as Shift, about $11, right? And now they're up 1,872% with a market cap of $18 billion. So this, I think Shift is in the earlier days, and it is like a Carvana, and it can be a huge competitor to Carvana too. Now, even if Shift just gets half of the market share, the market cap would still be around $8 to $5 billion. So for Shift to see a 2 to 3 to 4 times increase in its share price, I think is very realistic. But remember, you're going to want to be holding this one for 3 to 4 years, because if you look at Carvana, that's how long it took Carvana to actually take off. They listed in 2017. This one listed in 2019. So it's already a year in, but it takes time for it to actually take off. And Shift, I like its business model. I actually looked into them. I actually had a friend who was selling their car, and they went through Carvana, they went through Shift, they went through CarMax, and Shift, believe it or not, was the one that actually offered the most for the car, which is a great business model, obviously, because more people are going to be going to Shift. They just don't know about Shift yet. So once people find out about Shift, just like Carvana, it will be taking off. And I do think that this one can be the next Carvana if you have a long-term mindset, you're prepared to wait a long time, or at least a big competitor to Carvana. So even if they don't get as big as Carvana or the next Carvana or past Carvana, even if they're still half the size of Carvana, which is super realistic, they'll still 4 times their share price too. So it's a great one to watch out for, a great one to look for long-term holds. All right, so let's talk about a few swing trade opportunities next. One's going to be Fastly, ticker symbol FSLY. So you see it goes up and down very, very frequently here, from all the way from 78 to 94 to whatever it is, 100, all the way down to 78 again, all the way up to 116, back to 75, all the way up to 94, back to 76, all the way up to 123. And then it went as low as $63 recently too. And now it's climbing back up to 93 to 95. So I think that this one's very, very realistic to see this hit support again of around $75 to $80. I'm going to be putting a price point of $80 on buying them. I think it will get back down to $80. It might be a few months until it happens. But remember, I'm no rush to get into Fastly. I think $80 is a great price point, and you can swing it all the way up to 100 or even 110. This one has a few resistance, so it could be right at its peak right now, or it can rally all the way up to like 116, 115, or it can even go all the way to 126 before it heads back down to around $80 a share. So keep your eye out for Fastly for a good swing trade. All right, another great swing trade opportunity is going to be ticker symbol YEXT, YEXT, and you'll actually see it follows the same pattern, goes up and down a bunch. Its support was right around 15, and it's at like its bottom support right now, which is about 15.90. You'll actually see right here it's 15.41, so it couldn't probably go maybe a few cents lower. I picked up a few shares right around 14.96, and I'm probably going to swing trade it all the way up to like $17.88 or even $18 a share. So I think that this is a good swing trade in the next coming weeks, maybe like a 1 to 2 week, 4 week hold max. But even if I have to hold for 2 to 3 months, that's totally fine because I think overall it will be going back up to $18 to $19 a share again. And the last one is Lemonade. We talked about this one on the channel quite a few times, so I won't go too much in detail about it. We've been recommending this one ever since it was like $70 a share, and right now it's up 8% in the week. It's up 67% in the past month, and it's up 100% in the past 3 months. This is a great insurance company for people, millennials, younger people, and I think it's going to be growing significantly. I can actually see this one going up another 100, 200% in the next 2 to 3 years too. So another long-term hold. This is one that's going to be making a name for itself. It's a great industry disruptor. So definitely have your eye on Lemonade for a long-term hold as well. And I would like to be buying this one right around $87 a share, by the way. So $87 a share, hold for about 2 to 3 years. So that's my personal advice. That's what I'm going to be doing personally. So I hope you guys did enjoy the video to see kind of how I think about stocks. I come on here every single day to let you guys know how I think about stocks and what stocks I'm looking at to kind of give you guys a different perspective or maybe change your mindset a little bit. And remember, Robinhood's not my only account. I also have a Webull account that I'm up significant percents on, which I'll make another future video about again. I have a Fidelity account, a Vanguard account, a Coinbase account. So I have around 50K into the market, maybe 40K, around 50 to 40K in the market total. So I didn't just make $5,708. I probably in the last 3 months made closer to $15,000 to $20,000 in the past 3 months on the market. So if you guys want to see exactly what I'm buying, selling, remember I am making a wait list right now. So if you want to get on the wait list, DM me. I'll put you at the top of the list for when it does open back up. If you like the video, drop a like on it. It really does help me out. It recommends my video to other people and let the algorithm know that it should be recommending the video to people too. So if you guys do want to help me out, make sure you leave a like. Comment below too. Comments do help as well. And make sure you share with a friend if you think that they can find this video beneficial too. And I'm going to be giving out $5 to the first 5 people that screenshot this timestamp in the video where I'm talking about it to let me know that they watched the video all the way through to the end. And let me know what was your favorite part of the video when you do send me the screenshot. Send me your Venmo or Cash App, and I'll be happy to send that over to you too, that $5. So guys, I hope you did like it. I'll see you in the next video. And until next time, remember, don't time the market, buy the market. Peace.